here today with James Loney of Process Mortgage. He has been in the business for 5 years, been with a few different companies, but now has his own company. So here's James Loney.
Hi, how you doing?
So James, how did you originally get into the mortgage business, and what kind of drew you to it?
Sure. So I've always kind of been in the sales field. I did some water treatment systems, and I sold suits for a long time and men's clothing, and I ended up having a good friend who was an underwriter, and after meeting her and becoming closer, she's like, you need to be in the mortgage business. And so it took her about 2 years to convince me to make a transition and look into the licensing and that sort of thing. But you know, once I did, I'm loving it. It's a great fit for me, and I definitely, every time I see her, I'm like, I really appreciate you sticking
awesome.
with me and pestering me for 2 years to get into it. But it just, it was kind of her words were the catalyst of, this is what you need to do. And now that I've been in it, man, it's great. I'm having a good time with it.
That's awesome. So she is in the mortgage business?
She is. So she works for a local mortgage company here, and she's one of the head underwriters for that company, and she has a team, and so she's been doing it for a long time. And but yeah, so she's still in the mortgage industry, and when I have tricky files, she's definitely one of the first people I call. I'm like, hey, what do you think about this, or what is the guidelines on that? And so she likes the puzzle of it, so it's good. It's good.
That's awesome.
Yeah, it's good.
So what made you want to transition and actually start your own company?
So an opportunity came up where I had worked for a few different mortgage companies and saw some of the benefits that they had, but when I was with each company, it was, man, I like that the company does this, but the other company I was with did things this way that I really liked, and vice versa, and just trying to find the most beneficial situation possible. And really it made a lot of sense for me to just become my own broker, where now I work with, rather than just one bank, I work with about 8 different banks or 7 different banks, and you really get some of the best to pick and choose from each of those companies. And so it really gives me a lot of options, and a great way to help out more clients with more arsenals. And I look at it as just having more arrows in the quiver, per se, that if there's one bank that doesn't have a great fit for a client, I can send it to another bank. Or there's banks that are specialize in getting things closed quickly, so we can work on that. There's banks that really focus on having the most economic rates, so depending if that's the best situation for the client, and really being able to have those discussions, have those conversations, and really find the best fit for the client, and get them the best situation possible.
Okay, so you feel like now you can help more people to get a loan?
I do, yeah. Whereas sometimes the normal lending banks or the normal mortgage companies will have some specific overlays or some additional criteria that a client will have to go through to get qualified, and so this opens up the possibility to help more people, and to really help not only the buyers, but to help my agent referral partners as well, that if I can help them grow their business, and if I can help them just sell one more house a year, then we all win together. So it's been a great thing so far.
Right, makes a lot of sense. So, and you mentioned agent referral partners. So is that the main source of your business?
It is.
Getting it from real estate agents?
Yeah, it is. That's where I really spend the bulk of my time, is networking and building strong relationships with real estate agents and realtors that put their trust in me to help them and to help their clients, and then in turn, I build their trust, and I build that relationship, and then they send me more clients. So it's kind of like I said a minute ago, it's we have to all win together. Right. It really is a team effort, and when you look at everything that has to go exactly right through the course of a home buying transaction,
right,
it's amazing that these things close sometimes. and so it really is a team effort of, we all have to move in the same direction at the same time, and so it is. I've been super fortunate to build some great relationships, and but also that's when things don't go so right, it's, hey, we got to bite the bullet and say, okay, this is where things didn't go right, but this is how we're gonna fix, and this is how we're still gonna get to the end zone there. But it's but that's definitely where the bulk of my time is spent, is meeting new referral partners, but also nurturing and cultivating the current ones as well, because nobody likes to feel like an old glove,
That's exactly it.
So.
That's it. And full disclosure, James and I do work together.
We do,
and I highly recommend him. He's awesome to work with, and very easy to communicate with. So you had mentioned as far as how hard it is to get some of these deals through. Do you remember any particularly difficult deals where there were a lot of obstacles, but you did make it through them?
I was thinking about that when we were chatting the other day about getting ready for this, and there's one that comes to mind back in October. I told him once we closed that he's my gold star loan, because he did this buyer did everything he could to not be able to buy this house. When we initially do initial consultation with the client, I send them a list of what we call loan killers. Right. And it's like, do not do these things or else you could kill your deal. And he did several of them. He bought a new car. He ran up his credit cards. His credit report expired. They increased the purchase price on the house he was looking at and didn't tell me. I mean, just anything and everything that he could to not be able to buy that house, he did. And yet, we were able to work it out, and he had to work some overtime and bring a little bit more money to the table than he originally thought he was. But we got him closed, and now he's in his house and everybody's happy. But it was, it's those kind of transactions definitely test your skills a bit of, okay, how can we rearrange this thing? How can we repackage this thing? How can we rework it and still be able to make it work and get it to where we need to be? But everyone's different, everyone's unique, and it's particularly challenging during the holidays when you're going into Christmas time and money's tight, and that your client needs XYZ dollars for the transaction, but there's Christmas presents and there's dinners and there's everything else, and the tendency is that, oh well, I'll just put it on my credit card. And then there's just the holidays are tough, and with everybody closing and this, that, and the other, and attorney's not working and appraiser's not working, and it just that's the other tough time is during the holidays, because it's I love the holidays, I love time with my family, but by the day after Christmas, I'm like, we just get back to work. Like, all right, let's go. There's stuff that's got to be done. There's stuff that's got to be done. So let's get back to work. But yeah, those are a couple of challenging times.
So what would you say is one of the most fun parts about the business for you?
I think some of the most fun is when you get those files where you have a client who they don't think they're going to be able to buy a house. They have some challenges, whether it be financially or in their credit situation or whatever the case may be. They have some challenges, and you're able to sit with them and work with them and counsel them, and whether it be, sometimes it's you counsel them over a course of months to help culture their credit and help correct some of those things, or sometimes people just think that they're worse off than they are, and say, no, I think we can actually make this work for you, and you help those clients, and you help those clients get to a position where they can buy a house, and then you go through the whole transaction and you get to the closing table. And you can see sometimes there's a little emotion there.
Yes, and a lot of emotion.
And sometimes a lot of emotion, exactly. And being able to get to that point, and just seeing that emotion, and really saying, man, this is what we helped you to build. And it's always the client. The client does the work. You just have to direct them. Right. And being able to get to that point is really the greatest thing, man. It's awesome. And just seeing the happiness and the family, and knowing that you're helping them to change the course of their family history from that point, and it's a great thing. It's
Yeah,
a great thing.
absolutely. Yeah, and what you told me, that reminded me of like kind of the hero story. So
Absolutely.
the client is the hero of the story, but we're the guides
Absolutely.
that just help
Absolutely.
show them the way so that
Exactly.
they can ultimately get the success they want.
Yeah, exactly.
Yeah,
Exactly.
I'm with you on that. It's an awesome feeling when you
It,
like
it
get to
really
the
is.
finish line.
It really is.
So, where do you see the company, say, and yourself 5 years from now? Do you see yourself growing into a larger role, doing basically the same thing?
So ideally the goal would be in 5 years. So I'd like to bring on 2 or 3 more loan officers to work on the team and getting into a management role of managing the other guys on the team or girls on the team and helping them to grow their business personally. And as my referral network continues to extend, it's getting tougher and tougher to give that individual attention.
Right.
And so being able to delegate some of those day to day, like phone calls or follow ups or ordering appraisals or the day to day loan stuff,
Right.
where that way I can focus more on the cultivating the relationship with my referral partners, cultivating the relationship with my clients, and allowing them to take over some of the day to day operation of it, but also as my referral partners' businesses grow. Their businesses grow, and so they need more from me. They expect more from me, and at the end of the day, there's only but so much time.
Right.
And so being able to add a couple team players that can come in and help fill those gaps, and then it kind of becomes a split between doing what I do now, but also the mentoring and training and helping them grow their business also. So hopefully in the next 5 years, that's kind of where things will be.
So do you see yourself bringing on people who were in a similar situation to you? You can tell that they've got good sales skills and that they'd be a good fit, but aren't necessarily in the industry, or bringing people from other companies?
I think it just depends. It's really when I look at people that I would want to bring onto the team, it's really just the hungriness factor.
Right.
Whether they're in the mortgage industry or not, the hunger is one thing that you can't teach.
Right.
You can't teach the drive. You can't teach the wanting to get up and go to work every day and do a good job. I can teach you FHA guidelines. I can teach you Fannie Mae guidelines. I can teach you VA residual income. I can teach you all of those things. I can
Right.
teach you some social things to get out and network, but I can't teach you, or I can't make you want to get up and go to work every day. and that's the thing that you really look for.
That is the tough thing in both of our businesses, where
Absolutely.
you have all this freedom, and so you get the freedom to not get dressed and sit around and watch TV all day.
When this underwriter friend of mine, when she was trying to convince me to get into this, she told me that she's like, you're going to do awesome if you just get up and go to work every day. And coming from the background in sales that I had, I was like, is that like an option? Like people can decide to just not go to work every day, and I'm like, it was so foreign to me.
Right.
And but now, after being in this for a few years and having a little bit of success, it's definitely tempting. There's days where man, I just want to lay in bed.
Right.
Particularly, we're in early January, and it's cold and rainy some days, and those days I'm like, man, I just want to light a fire and lay in bed all day and not do anything. But
Right.
that's not the way to do it. And you just gotta bite the bullet and get up and go to work and do what you got to do every day.
Absolutely. Well, are there any questions that I didn't ask that I should have asked?
No, I think the biggest thing is, man, it's people think, oh well, there's you can make all this money in the mortgage industry, or there's this or there's that, and oh, it's great, you get to make your own schedule, and I think to a degree that's true, but there's a lot of work.
Right.
There's a lot of work, and your hours worked are just a little different. I'm not. I do have a lot more control of my schedule now. I'm not confined to 4 walls like I was when I was running a clothing store, but I think I work probably more hours in a week. They're just different hours. Mm-hmm. My phone is always on. There's not really days off, and there's one time, funny story. I was driving to my brother's wedding, and it was during my busiest month ever,
Mm-hmm.
and my phone kept blowing up, and my wife was like, "All right, we're gonna switch." So she got in the driver's seat. Her and her daughter were up front. I'm in the back. I have my laptop. I have my hotspot on, so I'm on the phone doing loan stuff, driving to Ohio for my brother's wedding, and that's just part of the business. Like it's when sometimes it's very time sensitive,
Right.
and particularly in our market that we're in now, there's a lot of competition for every house that's on the market.
Yeah, it's a tight market,
And
so you got to move quick.
absolutely,
For sure.
absolutely. And so it's, hey, if one of my partners calls me and says, hey, I need an approval letter for John and Susie, and there's 4 offers, they want highest and best by 5 o'clock,
Yeah.
and it's 2:30. There's not much time there to say, oh well, I can put that off till later.
Right.
Or we've got a client that wants to get pre-approved, and they want to go look at a house that there's already multiple showings on it.
Right.
And so being able to have that responsiveness and sort of things. So there's it's a lot of fun, and you meet a lot of great people, and there's a lot of reward to it, but there definitely is a work factor to it. And I think some people misunderstand that for what we do.
I think so. Yeah, I think there obviously there's a lot of overlap between real estate
Absolutely.
and the being a loan officer.
Absolutely.
And I think that people misunderstand that freedom just means you can decide between working 55 and 60 hours a week.
Yeah, exactly. Do you want to work those hours on Friday, or do you want to work those hours on Saturday?
Exactly.
That's
and you need to be available when the clients
Absolutely.
are ready to talk to you.
Absolutely.
So if it's the Tuesday night or Sunday morning, you got to be available for it.
Absolutely. That's the way it goes, man. And but it's a great business. It's a great way to take care of your family. And the big thing too is, you just meet a lot of great people.
Right.
There's people that were strangers, no clue who they were 3 years ago, that have now become some great friends, and all because we work together, and we do business together and do life together.
Right, absolutely. I just thought of one question that I meant to ask you about is you do refinances in addition to new loans, correct?
Absolutely.
At what point do you recommend to somebody they refinance? Is there a certain amount of time that they need to plan on living in the house? Is it a certain separation of interest rates between what they have and what they could get?
Yeah. So what we look at is, typically we look at what the cost benefit ratio is going to be. So we look at, okay, here's what the refinance is going to cost, and usually the biggest fees involved in a refinance are your title fees. So they're not even fees that are accrued by the mortgage company in most cases, but they're the title attorney and the recording and the taxes and yada yada yada.
Right.
And so what we look at is we look at what that's going to cost, and we look at what they're going to save monthly by the refinance. And we say, okay, if it's going to cost you $3,000, but it's going to save you $300 a month, which would be like an extreme example, but then you're looking at, okay, 10 months you're going to make your money back. So if you're going to be in the house longer than 10 months, then it makes sense.
Right.
But obviously that's a bit of an extreme example, because you'd be hard pressed to save $300 a month.
Right.
But that's kind of what we look at. The other thing we look at is, I helped a client with a refinance earlier this year that it was more of an overall financial benefit than it was specifically on the house. They had some kids going through high school and some tuitions and things like that, and they had some credit cards. They did some home repairs that they put on credit cards, and so now they had some higher balances on those cards and different things. And with interest rates being so low right now, we ended up doing a cash out for them, pull some equity out of the house, pay those high cards down, and now rather than having 13, 14, 15% interest on those credit cards, we roll it into a 3.5 on the house, and it ends up being a much better overall situation.
Right.
So each one's unique. Or I've got people that they want to do an addition to the house or something like that, and so we can do a renovation refinance, and they can use the funds from that to do that. Rather than putting on the credit cards and things like that. So it really just depends. But what we do is I tend to, every 3 or 4 months or so, I go through some of my past clients, look at what program they're in, what rate they had. On a VA loan, they have a program called an EARL, which is an interest rate reduction, which is the best kind of refinance because you essentially just knock the rate down from whatever it was to whatever the new rates are. Which there's a lot of those right now in the market based on the rates continuing to trend down. So those are a great one to follow, and usually we look for about a 0.5% savings on the rate.
Oh, that's
on
all
those.
it takes, just a 0.5%?
Yeah, about a 0.5%. And that's when we start having the conversation. In some cases, it makes sense to the client. In some cases, it doesn't. But then there's times too where a client will call me and they're like, "Well, I'm thinking about refinancing," and we start talking through it, and they're like, "Well, I'm only going to be in the house for another 2 years. Your break even's like 23 months." And it's not really going to be a dramatic difference to what you got going on, and just you be a open and honest and an advisor with integrity, and be like, it's probably not the best thing for you,
Right.
and help them again with their build their overall financial picture through their mortgage, because the funny thing is everybody talks about a financial advisor. Financial advisor generally deals with about 10 to 12% of somebody's income. And on a mortgage side of things, we're looking usually somewhere between 35 and 50% of somebody's income that we're dealing with and allocating.
Right.
And so it's a huge part of somebody's life situation in their mortgage, and so really we want to help them to leverage that into the big picture and building wealth over time, and really putting themselves in a good financial situation 2, 3, 5, 10, 20 years from now, and in their mortgage.
So it sounds like if somebody's even thinking about a refinance, best thing to do is at least have the conversation.
Absolutely.
So they can explore their options.
Absolutely.
And I know certainly when somebody's looking to purchase a house, I always encourage them to talk to you as quickly as possible.
Absolutely.
Because I think, as you said, people will be surprised that they could be approved. That there's a way to get them into the house they want and put them in a much better financial state for the future.
Absolutely. Yeah, it's always good to talk sooner, because even if you have credit challenges, I mean, we can take those head on and come up with a plan, rather than okay, well, I'm looking in 6 months, let you pull my credit in 6 months. Well, we could have been working on the credit through that whole period, and getting you set up, and even if you're in a qualifiable situation, maybe getting you in a better situation, and just making the most of it.
Right. Awesome. Well, do you have anything else?
No, I appreciate you asking me to come down and chat with you, and
I
look forward to it.
Yeah, and I thank you so much for coming in. And as I said, I highly recommend James, and we'll include his contact information in here. So if you're thinking about refinancing or considering purchasing your first home, please reach out to James, give him a call, and at least start the conversation so he can, help guide you along the way.
All right. Thanks, man.
Thank you, James.